Southeast Radio's Business Matters with Karl Fitzpatrick.
Well, the mortgage market has witnessed a lot of turbulence in recent years, but in the second half of 2024, the number of homeowners that switched mortgages steadily increased. Why is this the case, and what level of savings can be made from switching your mortgage? Well, Seán Corbett is the Director of Mortgages with SYS Mortgages, and he joins us on the phone now to discuss the latest developments in this market. Seán, before we discuss mortgage switching, tell us about your own experience within the mortgage industry.
Morning, thanks for having me. I've been doing mortgages for over 30 years, both in the UK and Ireland, and vast experience of dealing with all types of lenders and all types of situations. So I'm glad to say I've seen it all at this stage. I've been there when interest rates were up at 15.4%, and now gladly when they're back down at the 3% mark.
And given the challenges which exist within the housing market today, what impact has this had on new mortgage applications?
The rules relaxed slightly in 2024 when first-time buyers were allowed to borrow 4 times their income, and indeed second-time purchasers, i.e. subsequent purchasers, were allowed to borrow up to 90% of the property value rather than 80%. So the rules relaxed slightly over the last period of time. The application volumes also increased. The big issue we have, and it's an ongoing issue, and I foresee it still being an ongoing issue in 2025, is that the lack of properties. And that is, it's the competition out there to try and secure a property, and a lot of properties actually going above asking price. So I don't envy any buyer at the moment trying to navigate the market, but money is readily available and rates have come down. So look, there is good news as well.
And how beneficial has the government's Help to Buy scheme been?
Oh, hugely. I see it. What has really saved the mortgage market over the last number of years is the availability of new build properties in the market. I see personally from my own business point of view that about 1 in 2 of the mortgages we do, they would be for either a self-build mortgage or a Help to Buy. And out of those applications, I see there's 80-90% of those people are actually availing of the Help to Buy.
What trends are you expecting to see in the year ahead?
Hopefully a new lender to enter the market, i.e. Revolut. The credit unions coming to the market, all of them now in the coming year. So I am expecting to see trends in that competition. We saw the likes of Bank of Ireland in late 2024 reducing their rates, following AIB reducing their rates. And I'm expecting PTSB to follow very shortly, and hopefully more lenders. So the trends I am expecting to see is more competition in the market, which ultimately will give better value to customers.
How disruptive do you think Revolut will be in the mortgage market?
They're talking about coming into the market in the second quarter of 2025. And look, we've seen it on their personal loans, we've seen it on their banking. And I think they'll bring a very slick process, and I think they might bring good value mortgages. They've got a massive savings book with people with money, so I'm sure they can offer very competitive rates to the market if we're ready for them.
And of course, this year will also see landmark regulatory changes which will allow credit unions to offer mortgages. What impact do you think that this will have on the Irish mortgage scene?
Credit unions to date haven't been really offering fixed rate mortgages, so they haven't been that competitive when you compare them to the main banks. However, they have got a degree of flexibility, so I would imagine them coming to the market, they will open up the market to offer mortgages for more people, i.e. people who might not get a mortgage on the high street.
There was a lot of talk as well over recent years when interest rates increased at a European level and of course then fed through to the Irish market. At that stage, did you see many mortgage holders surrender their tracker mortgage?
Yeah, there was. The advice varied on trackers over the years, and indeed, if you went to the market probably 18 months to 2 years ago and you were on a tracker, rates were very, very good. But then rates went up high very quickly. And when rates hit the ECB levels of 4.5 and so on, your tracker was heading for 6% in some instances. And then people were availing of the rates out there in the marketplace of 3 to 4, maybe 4.5% and coming off their trackers. Now the advice, because rates look like they're coming down and their fixed rates are starting at 3%, for instance, but saying that you're still better off sticking with your tracker now at the moment because the ECB rate's down at 3.25%. So tracker rates now currently are falling between 3 and 4%. And the predictions are that they will drop maybe another 1% in this current year. So you could see tracker rates back down to between 2 and 3%. So if you're currently on a tracker, stick with it.
Talk to us about mortgage switching and how fluctuating rates are increasing people's interest in switching mortgages.
Yeah, no, they are indeed. And it all stems back to 2024. The first half of 2024 for switching your mortgage was fairly poor in the Irish market. There wasn't a lot of interest in it because interest rates were remaining relatively high, i.e. between 4 and 5%, even on a new fixed rate. So people were literally sticking with the rates they had. Now things have changed considerably in the back half of 2024 where rates now are dropping and there's a bit of a rate war going on out there. So people now are thinking, look, I'm coming off my fixed rate maybe with my existing lender or I'm on a variable rate with my existing lender. Is it now a good time to switch? Because there are a lot better rates out there and rates do seem to have stabilised a little bit. So people have become a lot more educated on switching in the last 6 months and that has provoked a lot of interest in the market. There has been a lot in the news recently about interest rates coming down. So I do see the first half of 2025 where people will still be at least making an inquiry to switch their mortgage. And remember, what anybody should do if they've got a mortgage and they're coming to the end of a fixed rate and they're on a variable rate, they should at least see what is your existing lender offering you and then compare that to the market. It costs you nothing, but it could save you thousands.
Isn't it worth their while wait until the rates come down by another 0.5 or 1%?
It would if there was a guarantee that they were going to come down. But remember, the ECB, the European Central Banks, although they reduce rates, and they have reduced them over the last number of months now, and they look like they're going to come down by another 1%, that 1% doesn't directly affect fixed rates or variable rates. It only directly affects the likes of tracker rates. So fixed rates went up over a period of time, and they went up quite steeply over a period of time, but they didn't go up as much as the European Central Bank put up their rates. So that's the key. Where are rates going to end up? There might be another quarter in it for fixed rates. That's all I see. I don't see rates ever in the next couple of years going down to 1.95 or where they were in 2020. So it's picking a budget. Does that suit your needs now? And do you want that stability? Now you can go on a variable rate, of course, with a new lender, and then switch on to a fixed rate with them. So the trick is get advice. What are you looking for? What are you happy with, and what's your current lender offering you?
So for those that are open to switching today, what level of savings could a property owner achieve through switching?
It does vary, and that's why I'm saying you need to see what your existing lender is offering. But I'll give you a real example. I'm doing a switch for somebody at the moment. Their mortgage is roughly about €220,000. They've come off a nice fixed rate with Finance Ireland, and their payment is going from €960 up to €1,500 per month. I've switched them to one of the main banks, and they're now going to be paying just over €1,000 a month. So by switching, they're effectively saving €500 per month.
Now, while equity release would increase the loan amount, is it proving to be a popular option for homeowners? And if so, why is that the case?
I see it on a daily basis now. There's several reasons. Look, you can raise money on your property on the portion that you owned outside of having a mortgage, and you can raise it for anything from, believe it or not, medical expenses, IVF treatment, putting your kids through university, or the one I see at the moment that's most popular is actually doing up your property. With the lack of homes in the country, a lot of people are choosing not to move now. So instead of moving, they're putting a little extension on their property. They're doing up their property. They're staying put. And I also see people switching to do what we call debt consolidation. A lot of people have taken out short-term debt, but now they're putting that into the mortgage just to make themselves more affordable. I am saving people 600, 700, 800, 900 euros on a monthly basis just by consolidating some loans into their home. Now, it doesn't suit everybody, and you are spreading your debt over a longer period of time.
And what qualification criteria will the homeowner need to navigate in order to be eligible for equity release?
If people remember back to taking out the first mortgage, it's very similar to that. When a lender will assess you there for equity release and to switch your mortgage, they'll look, one, can you pay back the money? I.e., have you got a good track record of paying your current mortgage? Are you earning income, whether that's self-employed or whether it's employed at the moment? And will the level of your income actually cover that mortgage? And you're looking up to 3.5 times your income. So if you look at your gross income, including variable income, and you multiply that by 3.5, that will give you a rough idea of how much of a switch and equity release you would qualify for. They will look into household expenditure. I.e., have you got kids? Have you got existing debt commitments, and how have you performed with those debt commitments? What I mean by that is personal loans, credit cards, and so on.
And Seán, what costs are associated with equity release?
The costs associated with equity release and switches are virtually the same. Anybody switching a mortgage, regardless of equity release, will have some legal fees to take into account. So you will need a solicitor involved in the process, an evaluation fee on your property. So it's important to take those into account. But do remember, if you're switching your mortgage, most lenders out there now will offer you a cash incentive to go with them.
Well, if you've just tuned in, that was Seán Corbett from SYS Mortgages. And I'd like to thank Seán for sharing the latest mortgage trends with us this morning.
Southeast Radio's Business Matters with Karl Fitzpatrick.